Hello financial investors and welcome to the channel. My name is Brent and in today's video we are going to be doing stock market recap for week 8 of 2021. We're going to be covering the 22nd through the 26th of February 2021. We're going to go ahead and kick off this video by looking at last week's changes of the week, which are up on the screen now, week 7. Then from here, we're going to go ahead and jump into our most current news article that I found interesting for this past week, which is, the new stimulus package was just signed here on Saturday. So we're going to go ahead and cover who qualifies for the next stimulus update. And then at that point, we're going to go ahead and kick off over to the 4 main indexes, take a look at the performance for the week, taking a look at the entire S&P 500 performance for this past week, what stocks were up, what stocks were down, what sectors were strong, what sectors were weak, such as we have up on the screen now. Then we'll take a look at oil, dollar, silver, gold, bonds, the 10-year yield, which has been increasing very steadily over these past few weeks, and we'll take a look at mortgage rates, which are jumping up pretty quickly. So if you are looking to refi or buy a new home, it looks like rates are moving really quick, but there was a announcement that they are going to be buying up some bonds, which will help drop that yield and drop mortgage rates back down. They're trying to keep it suppressed. So let's go ahead and kick off the video. Of course, if you are brand new to the channel, have not yet subscribed, go down below, hit the red button to subscribe, make it gray, hit the bell to be notified every time we release a brand new video, and of course give this video a thumbs up, make it blue, and let's go ahead and get into the video. Now, last week, week 7 for the 15th through the 19th of February, we had Bitcoin hit a record high of over $56,000 per coin. So the S&P 500 during that same week where Bitcoin was hitting highs dropped by 0.71%. The Dow was essentially flat but positive by 0.11. The Nasdaq had fallen by 1.57%. The Russell 2000 had also fallen by roughly 0.99%, essentially 1% there on the Russell 2000. So last week tech had been falling pretty hard. Now we can see here in the bright red we had Facebook, Disney, Netflix, Nvidia, Microsoft, Apple, a lot of the Nasdaq stocks, those tech heavy stocks, had come down pretty hard. We did see that energy and financials were pretty positive though last week. Now jumping into the article here that I was just kind of reading over, is that on Saturday they signed this new stimulus payment under the American Rescue Plan. Now on Saturday they did pass this $1.9 trillion plan that goes out for the third stimulus check worth up to $1,400 for taxpayers and each of their dependents. So this kind of gets broken up depending on your adjusted gross income, up to $75,000 for married single individuals up to $75,000. You would get that full amount or partial up until there. And then for married couples, you can go up to $150,000 and you just get a partial piece of that. I know my dad, for example, he didn't get the full amount of the last stimulus update that went out. He got like a partial, just depending on your income, how it's adjusted. So here it goes into to go ahead and go over, you would get the $1,400 individually per adult plus an additional $1,400 for each dependent. So an eligible family of 4 would have received roughly $5,600. So I feel like that's one of the largest stimulus rollouts or stimulus payments that we have received, over the past few. So really, as long as you are a taxpayer out there, you're making income less than those thresholds, that does look like it's going to be sent out. So this little article here, I'll go ahead and share this over on my Facebook page. If you guys are interested in checking it out, go ahead and do so. Now jumping over into the main index moves of the week, we can see that this past week the S&P 500 moved down by 2.45%. That is the largest move that we have seen in 2021 so far, I believe. And here we can see that year to date we are positive by 1.47%. So right here, kind of hanging on the balance. If we have another negative week, say, it gets rockier than what it is this week, we've seen those weeks where we lose 5-10% in a single week. So we may see some volatility here in the upcoming weeks. The Dow Jones moved down 1.78, still positive by 1.06%. The Nasdaq took the biggest hit this week, down a massive 4.92% there. Huge move to the downside on Tuesday. And then if you bought on the dip on Tuesday, you definitely had some recovery, but Thursday essentially lost it all once again. Dipped pretty hard on Friday and made just a slight recovery, but essentially down there 5% in a single week, putting it down year to date to positive by 2.36%. So that was a huge chunk they're taking out of the Nasdaq. I know a lot of my friends over on Facebook and here on YouTube who have been invested very heavily inside of tech stocks. Their portfolios are just bleeding out right now. I know a couple friends that have been invested in some of the, what are they called, the electric businesses. There was a merger or partnership between two of them that they were talking about on their Facebook page, and they're down a good double-digit % in their portfolio. So I know, it's pretty interesting times out there. The Russell 2000 down 2.9%. I would say this is pretty mild, especially when they have been up so much this past year. They're up 11.45% at the moment, and this is a lot of those small mid-cap businesses that are kind of reopening here with the whole vaccine rollout that's been going on, and a lot of the different states throughout the United States are actually choosing to open up. I know here in Oregon, our schools are locally reopening. My son is going to kindergarten for his very first time in class, and he's really excited to be able to finally get out of the house, get away from us, and just be with other kids of his age. So he's really excited about that. And it's kind of interesting to see that we're kind of going back into the mellow of it all. The normal life, I suppose, just with a face mask. Now, taking a look at the 1 week performance here of the S&P 500, let's go ahead and zoom in just a bit more. Now, this is a 1 week map right here, so we can see it's very red. Not any one single sector wasn't hit. I do see a few in the red that are in the energy, but for the most part, Exxon and Chevron both positive by nearly 4% or more. We do see Visa and MasterCard over here. MasterCard up over 6%. Visa there nearly 4%. But the rest of the market there pretty heavily red. Tesla has been downtrending by quite a bit over these past few weeks. Here this week down 13.54%. Amazon down 4.83%. Facebook 1.51%. Google, Microsoft, Apple down a whopping 6.63%. I don't believe I've seen Apple lose, nearly 7% in a single week here in 2021. I know in a week they made a 10% recovery. So losing 6% and then gaining back 10%, it's hit or miss. So I think there's a lot of volatility out there in the market. I can see utilities are very red there as well. There's absolutely no green in utilities. So if you have a portfolio of utilities, they got hammered. Walmart and Costco down over 6% there. So there's a lot of red out there, but there's a lot of opportunity. I know over on Facebook, I did post about Lockheed Martin. Could be an interesting one. We'll go ahead and check that out here towards the end. Oil this past week is up by 4.08%. Year to date up 25.11%. I know over in Texas with the current closure and oil reserves and oil fields and everything kind of frozen out and not being able to distribute oil, I know that prices have been steadily increasing. I know this happened about a week or two ago where prices has just been steadily increasing, and this is driving up the price of oil there as well. The dollar this past week, we can see here that it did actually start a little bit lower at 90.29 and has moved quite a bit. It's almost $1 higher here. It closed at 90.93. So pretty good movement there on the dollar. And silver down 2.41% year to date, almost still holding its positive by 0.33%, but another negative week will put this one into the negative for the year. Gold has been down for the past, I believe, year to date. I don't think it's, it looks like year to date, it's just been downtrending this entire time. Down 9.28% here over the year to date, but this past week alone, it is down 3.12%. So gold and silver just really haven't done amazing. I think the main focus right now as far as investments, look for those small mid-cap companies that are still producing earnings, that are still growing their income, their revenue, free cash flow, and that are able to be and remain open or are reopening more doors, in their businesses. I think that'll be really important. The bonds are down by 0.37%. They are going ex-dividend here on the 1st of March, so that'll be a 12-cent dividend payout to shareholders here. The 10-year yield, or 10-year rate. So this past week, I've noticed that the 10-year bond rate has been increasing very quickly. Last week it went from 1.2 to 1.34, and it is now at 1.46. So that's a big jump up from 1.34 to 1.46 there. That's over 10 points there in a single week, and that's putting a lot of pressure on mortgage rates. So here we are. The mortgage rates, 30-year mortgage rate rose by 13 basis points from what was it last week? 3.05 to now 3.18 in a single week. So I know that as far as refinances and mortgages, I have seen investors coming in the groups now kind of discussing that they're no longer getting mortgage offers, fixed rates of 2%. They're actually getting fixed rates in the 3% now. So I don't know who it was who had been out in the news kind of going about. It's the Fed president, Jerome Powell. So he was discussing how their plan still is to keep rates low, keep loans, keep money really inexpensive, especially during this downtime. So they do want to buy up more bonds, which should put pressure and drop down that yield. That 10-year yield should go back down. That'll kind of drive these mortgage rates back down as well. So that is it as far as our recap of the week. I did go about buying some on Monday. So on Monday I did buy some MEI. I believe I bought that one this past week. I haven't maxed out all my money within the M1 Finance account, but it will be fully invested here very shortly. I did also post a little article here. This kind of comes out where they're trying to make sort of similar to when you sell your stocks, you get that SEC fee at the very end. So if you sell like $1,000 of a specific stock, there's a little fee that's involved there. They're essentially trying to propose that they want to tax every $1,000 of transactions. They want to tax you roughly $1. So this will just be like a partial tax. So if you buy $500 worth of a stock, you'll get taxed 50 cents. So it'll be basically like a SEC fee, but it'll get tacked onto your buys versus when you sell. So that's something that's getting proposed just to kind of stop all that momentum buying. I don't know if this will actually, affect the big hedge funds that do the whole, they buy a bunch, they sell a bunch, they buy a bunch. They kind of control the markets that way. They make it seem like it's going red. I forgot what it's called, but I've seen that happen with GameStop and a few others this past week when they were doing the whole fiasco there. Now Lockheed Martin, I was kind of talking about earlier, it's looking like a pretty interesting buy at this moment. It recently dropped below the yield for the past year. So we can see here that Lockheed Martin is offering roughly a 3.03% starting yield. It is priced at $330.25. Now 52-week low is at 266. That is roughly a 19% move to the downside, and its 52-week high is at $417, which is a move to the upside of roughly 26%. So you have much more upside potential versus downside potential. Now I didn't include their percent moves here for their earnings, their revenue, and their free cash flow, but this has generally been positive in the double digits over the past 5 years. So I didn't it doesn't really show really well here. You can see revenue is in the blue line. That's been moving pretty positive. Here, net income is in the green. And this trend line right here is actually moving up in the positive. And this is, I don't know if this is billions. Oh, it says right there. Yeah, billions. So it's been moving higher over the past several years, and it's pretty positive for Lockheed Martin. So they do have that yield of 3.23. They pay out roughly $2.60 per share. So if you invested $1,000 into Lockheed Martin, you get an annual dividend payout of roughly $7.87, and have the potential for that recovery here of highs of 417. I don't know when it will come back to those highs of 417. But here in 2021, it has been beat up. It could potentially go down to those lows seen back in late, looks like 2018, but I don't believe that will happen. So that is all that I believe I posted here on Facebook. Oh, I did post the February dividends, so if you guys are interested in checking out the dividends, I did post these over on my Instagram page. So it goes over all the dividends that I received here in the month of February between M1 Finance and Merrill Edge. So the total there was $117.13 paid out between those two accounts. I didn't include the Roth 401k or the Thrift Savings Plan or a few other accounts. This is just the two main accounts that I kind of use here on the channel. I do eventually want to be moving over to Fidelity, but it's just been, I should be closing on my own home here at the very end of March. I'm also in the middle of tax season, so I'm trying to input all my data, get an extension on my business taxes. So I have a lot of other little things that are due here within the first quarter here of 2021. So I'm really focused on knocking everything out. That way I'm not hit with any fees or any of that fun stuff. So that is going to be it for this video. Let me know down in the comment section below if you guys did enjoy the video. Again, if you guys are not yet subscribed to the channel, we do cover the stock market, real estate, entrepreneurship, personal finance. If there's any specific areas that you'd like to discuss more or hear me discuss a bit more or kind of focus on, let me know down in the comment section below. Go ahead and hit the subscribe button to subscribe, hit the bell to be notified every time we release a brand new video, and of course give this video a thumbs up, make it blue, and I will see you guys in the next video. Thank you for tuning in. I'll see you guys next time. Bye bye.